welcome. You're watching The Money Show. I'm Kavita Thaplial, and the show is your one-stop destination for all your personal finance queries. Today, the focus will be on your portfolio queries because we'll be getting your live financial planning done live on the show. And just in case you want to send across any question, you can do that on our WhatsApp number and email ID. Do remember to send across all your financial details so that it becomes easier for our expert to guide you as per your financial goals and your requirement. Okay, so let's begin the show. And today on the show, I have with me Shweta Rajani, Head Mutual Fund, Anandati Wealth. Shweta, hi, good evening, and welcome to the show. Shweta, let's begin with viewer queries, and let's take Ajay's question first. He wants you to review his portfolio. The details are too many funds. That's all I can tell you. You also have the details. The first look says that he has a lot of funds. Quant fund from Axis, Mira Asset Large and Mid Cap, Mira Asset Focus, Motilal Oswal Nifty Defense Fund, Motilal Oswal S&P 500 Index, Nippon India Gold Serving Fund, Nippon Multicap, Sundaram Services, HDFC Banking and Finance, Defense, Multicap Manufacturing, SBI Magnum Mid Cap, SBI Small Cap, and Automotive Opportunities. So a very elaborate portfolio with no details in terms of guidance that we might want to give him for his financial goals. So let's just review the fund, assuming that he wants to be in this kind of an equity portfolio for, say, more than 5 years. Shweta.
Sure. Good evening. Ajay, I did go through your portfolio and the first thought is it's over diversified. You're doing a 25,000 rupee SIP per month. And for that, you don't really need 14, 15 schemes in the portfolio. So you can bring it down to an optimal, maybe at least, 10 odd schemes. And as your SIP amount goes up, then you can add on schemes if required. Now, one thing over here is, see, while at scheme level you have too many schemes, if I break down and see your AMC concentration, then approximately 1/3 of your money is going in a single AMC. So, when you say optimal diversification, it means having AMC level diversification, fund level diversification, as well as fund manager level diversification. That's when you will get the true benefit of spreading out. So that's my second point to you. My third point is, you are partly playing the role of a fund manager because you've chosen themes or sectors in your portfolio, and that's how you're playing out. You have banking, you have automotive, manufacturing, defense. So see, these are, themes or sectors that you will find fund managers playing even in their diversified portfolio, as long as there's a strong view that these are the sectors that are likely to play out. If you have a strong opinion on a particular sector, and you're tracking it very closely, then you can buy a particular, few stocks within that sector. But here I would suggest that you leave the decision of sector selection and stock selection to the fund manager, because he'll know what is the right time to exit, what's the right time to enter. And one example, like you have a banking and financial services SIP going on. But do you know that your overall portfolio also has around 30% of banking and financial services? So you don't need a separate sector fund to increase your exposure further over there, right? So I'm just going to jump on to the recommendations to you now. Some schemes where you should stop your SIP: Motilal India Defense, HDFC Banking and Financial Services, HDFC Defense, HDFC Manufacturing, Axis Flexi Cap, and Axis Quant Fund. Also, you have an S&P Index Fund. Now, given the outlook on India, US, where the valuations stand, the next few years projections, it may be better for you to be in Indian equities than overseas. So stop your SIP there too. What you can add on to your portfolio is an SBI Contra, ICICI Pru Large and Mid, and HDFC Flexi Cap, so that you get a good blend of different market caps, exposure to different AMCs, and optimal diversification. So that's my recommendation to you, Ajay.
All right, I don't have him on the phone line, but then I think you answered all aspects of his financial portfolio. Let's move on to Abhimanyu's question. He wants to start investing in mutual funds, Shweta, and plans to hold it for 27 years. Target is almost 5 CR. And what fund would be ideal for him, and how much should he invest on monthly basis? Interesting question, Abhimanyu, and congratulations for beginning your investment journey. And thank you so much for giving us the opportunity to guide you in this very crucial journey of yours. So, Abhimanyu, that's a very interesting question. I like the fact that you are, I'm sure even Shweta would agree with that. He has a time frame attached to it. He has a corpus attached to it. Although I'm not very sure if it's correctly assessed, because 5 CR in 27 years might not be enough if that's the amount he's looking for. But having said that, first step in the right direction. I'm not aware of his equity exposure otherwise, whether direct stocks or no. But then, what is an ideal first fund, for any kind of investor, even if someone who is not as well planned as Abhimanyu and, not as well thought through as Abhimanyu? Maybe a large cap or an index fund should be a first fund.
Sure, Kavita. So, your first thing, absolutely right, that he's got the first step right, that he has to set his goal. And his goal also, to a large extent, is clearly defined in terms of the time period and the value that he needs. Abhimanyu, just keep in mind the inflation effect, because as we say, inflation is a silent killer. What you think you can get in 5 crores today, probably 23 years later, you maybe needing 20 crores for that. So keep this thing in mind and see if you need to revisit your goal. Yes, for starting off, anyone, if you're not consulting or, an expert, then the best thing to do is go in for a flexi or a multi-cap fund, I would say, because if you have a longer time horizon, then it's good to have a blend of different market caps. But always, I would suggest, rather than that one single scheme, if you have the corpus, diversify it and have at least 4 to 5 schemes and look at that one portfolio instead of that one scheme that you would want to start off with. Abhimanyu, specifically coming to your question, you said you have a target of 5 crores. I'm assuming you're just starting off. So starting off with a 15,000 rupees SIP per month and stepping it up 5% every year, given that you'll have increments, bonuses coming in. Do this, and this should take you to your goal of 5 CR. Like I was, highlighting the importance of diversification across AMCs and market caps. The portfolio that I recommend to you is a portfolio of ICICI Approved Focus Equity, DSP Large and Mid, Canara Robeco Multi-Cap Fund in your portfolio, HDFC Flexi Cap, and an Invesco Small Cap, because 20 years, small caps do have the potential to outperform large. So, you would get that little extra advantage of a higher return coming in. So, that's your portfolio, but do review this once every year, because funds go through cyclicality. It may require some changes. So once a year, review is a must.
All right, Shweta, I also have a viewer on the phone line connected with us, Mr. Sreenivasa Rao. Hi, good evening, sir. You're calling from?
Hi, good evening, madam.
Hi,
I am
sir.
from Ongole, Andhra Pradesh.
Andhra Pradesh. Okay, thank you so much for sending us your question. Sir, I just want to confirm the details sent by you. You are 50 years old. You want to create a corpus of 1 CR at the age of 60, which is 10 years from now. And you want us to review your portfolio. I think currently you have Edelweiss Flexi Cap, Kotak Multi Cap, Motilal Oswal Mid Cap, and Tata Small Cap. Is that right?
Yeah, madam. Yeah.
So you're investing since how many years now?
Ma'am, 1 year.
You are investing since last 1 year?
Started from 1 year.
Okay. Okay.
Nearly,
Anyone recommended these funds to you, sir?
No, I selected my own, madam.
Okay. Okay. At this age, you want to invest in equity. Are you aware of the risk profile that you have and the risk involved in an equity asset class?
Ma'am?
Are you aware of the risk attached with equity by you're investing in mutual funds? Yeah, sure.
Yeah.
So you're aware of that, right?
Yeah.
Okay. All right. So Shweta, I think the first question that might have come, in your mind or my mind was, what about the risk involved? I think that's taken care of. He's very well aware of that. So that's covered. But yeah, funds, I think he can do better. What do you say?
Yes, so some of the schemes can be changed. Srinivasa, for your portfolio, talking about the goal that you have of 1 crore, you may have to do a step up of 10% on your SIP every year to get to your goal. That's one. Second, coming to the specific schemes that you have, I would say half of your schemes are good. Just two recommendations from my end. You have a Tata Small Cap Fund. Now, if I have to look at it's good to have some small cap exposure given that you are looking at long term and that you are deriving also through the multi cap fund that you have in the portfolio. So I suggest you stop your SIP in Tata Small Cap and the Edelweiss Flexi Cap Fund. What you can add instead of these two funds to your portfolio, go in for an ICICI Pru large and mid cap, a SBI Contra fund, and a DSP large and mid cap in the portfolio because having a little heavy large cap portfolio will help you get a slightly stable portfolio on an overall basis. So that's my recommendation.
All right, Mr. Srinivas, anything else you want to ask our expert?
Madam, SBI contra another funds, madam. Please tell me.
Sure. SBI Contra, DSP large and mid cap, ICICI Pru large and mid cap is what Shweta is recommending. And you have to step up your
DSP large
SIP
and
by
mid cap.
10%. Yeah.
Okay,
All
okay,
the
madam.
best, sir. All the best. Shweta, let's take Sudhir's question again via email. And Parag Parikh Flexi Cap, 2000 rupees. Canara Bank Blue Chip, 2000 rupees. Again, Canara Bank Emerging Equity, 2000 rupees. Axis Small Cap, 2000. And he wants to continue investing till 2030. So, yeah, that's all in terms of detail that I have for you.
Uh, so there's the one thing here, I think it's important to set your goal. We are not too sure of what is that goal amount you are targeting and for what horizon. Horizon, you're clear you want to do it till 2030, but what's the amount? Be sure of that too. You can either ways, I would suggest you to do a 15% SIP to your portfolio every year. Once you do that, you can target somewhere around a 10 lakh portfolio if you want to scale it up. Scale up your SIPs as well. One thing that I was noticing in your portfolio is that you have two schemes of Canada. So there is an AMC concentration, both of them also managed by the same fund manager. So you need to spread that out. So please do, as and when your amount goes on increasing, add one or two more schemes to the portfolio. Right now, you can continue with these two schemes. Both of them are performing well. The fund manager is also one of the good rated fund managers. One scheme that I suggest you to change is an Axis small cap fund. Instead of that, you can go in for an HDFC small cap within the category. HDFC small cap is more consistent. If I'm looking at the risk adjusted returns, the way it's being managed, HDFC small cap scores over an Axis small cap. Apart from that, you can add one more scheme to your portfolio, which would be an ICICI Pru Focus Equity Fund. That's a quick recommendation to you.
All right. Shweta, a lot of viewers just want to get their portfolio reviewed in terms of, the fund choices that they've opted for. Although grateful to them for sending us the question and seeking our experts' help. But then, why is asking just this much can be wrong and not give them the complete or the clear picture that they might need to work on as per their financial goal? Because, the funds might look right to you now, but then it's very important for them to understand that as a strategy, they need to be in a particular investment and what that strategy is, how is that strategy right. So I want you to guide our viewers to ask the right kind of questions. I know we've done that so many times on the show as well. If it becomes easier when people are there, when the viewers are there connected on the phone line with us, because then we can ask a lot of details. But in this scenario where Sudhir just gave us his fund's names and he just wanted to know whether the fund selection is right for him or not. So what all goes into planning or making that financial portfolio, designing that financial portfolio for a viewer with so many less details or missing details? Shweta.
Yes, Kavita, actually, you've brought out a very important point that a lot of the times, people just want a quick review. and not have a holistic view on the portfolio, which is a very basic requirement when you're doing your creating your portfolio strategy, when you're doing your financial management goal setting. It's important to have a holistic approach towards money management, and it first starts with deciding what your goal is. And goal can be very simply 10 years later, I want a 5 crore or a 1 crore portfolio. So defining that, even when you are asking your question, if you're not clear of the goal, that itself would be a start question as to how much should I target. So having a goal in place will then help you determine what your strategy should be, how much of asset allocation is needed. So sharing details about not just your mutual funds, but if you have other investments, gives us a better clarity to give a proper recommendation for where your investments are. And it also helps determining how much of equity, debt, commodity exposure do you really need, how much do you already have. And then let's coming to mutual funds specific or equity specific, giving an entire details of which funds you have uh, helps in telling you whether right now you are optimally diversified in terms of different fund manager styles, different AMC exposures. Are you getting concentrated to a particular theme? Are you getting swayed by how the recent performance has been? We've seen that generally happens. Like a few months back, we were seeing a lot of portfolios being heavy on small cap. That's because recency bias was playing out in portfolios. So it helps us identify if any of these is going wrong in the portfolio. So yeah, I think coming back, a very important holistic approach, setting your goals. It helps in defining what's the right strategy for you, how much risk can you take in the portfolio, are you taking optimal risk or no, and then giving you your fund recommendations would clearly work better. And lastly, one should not forget reviewing, even if everything is going fine, just reviewing a portfolio once a year will tell you if you're heading in the right direction towards your goal, or do you need any corrective measure in the portfolio. So, Kavita, that's, I think, my take on this, and my humble request to all who are putting in their questions on the portfolios. Please do share a little more details.
All right, Shweta, let's continue and let's take Sheetal's question. 3 CR in 7 years, monthly SIP right now she's doing is 60,000, portfolio of 32 lakhs, Nippon India large cap, ICICI Pro multi asset and value investment fund, Parag Parikh flexi cap, SBI multi cap, Edelweiss mid cap, Bandhan small cap, Nippon India short term fund. Sheetal, we don't have her on the phone line, but yeah, I hope she is ready to step up her SIP also. What will be the ideal amount to achieve 3 CR in 7 years, Shweta?
See, she has certain lump sum investments also that are going on. If she needs to get to a 3 crore, she probably, instead of 60,000, she'll need to take it up to 80,000 and then do a 15 to 20% step up in the portfolio. This will help her comfortably get to a 3 crore of a goal number. So do consider this, Sheetal. If you have the capability today to take it up from 60 to 80, do that and then do a 15% top up. If you cannot do it today, then look at stepping up your SIP by 25% every year. It should take you closer to the goal that you have. You have a medium term horizon in the portfolio. So, you can have a portfolio which is more equity oriented. I don't know what your asset allocation is right now, but I was seeing that you have one debt fund as well over here, and you have a multi asset allocation fund. If you have debt otherwise in the form of, FDs, PPFs, small savings schemes, then you don't need this short-term debt fund in the portfolio. This can be your pure equity portfolio, as well as you would not need the ICICI multi-asset fund. The other two funds, instead of a Bandhan small cap within the same category, I would suggest you to go in for an Invesco small cap fund. And instead of an Edelweiss mid cap fund, you can go in for a Kotak emerging fund. Two other schemes that you can consider adding on to your portfolio. One, a Canara Robeco multi-cap, and the other one would be an HDFC Focus 30 fund. The rest of the funds that you have are pretty much good. So I would say majority of your portfolio is into good schemes.
All right, Shweta, let's take Kishore's question now, again via email. And aiming for 1 CR in 15 years, total portfolio value is 2,75,000. And how can he diversify his portfolio better? SBI Contra, Motilal Oswal Mid Cap, Nippon India Small Cap, SBI Multi Cap, SBI Retirement, and SBI Healthcare Opportunity.
So here again, Kishore, to get to a goal of 1 crore, you have a 15-year horizon, so time is in your hand. What you would need to do is a 10% step up to your SIP. Once you do that, I think, in terms of achieving your goal, it should be achievable. Coming to your schemes, the first thing that comes into anyone's notice is a over allocation to SBI. Almost 60% of your investment, 6,000 out of 9,000, is going into SBI schemes. So while SBI is the largest AMC, but it's always good to spread out across asset management companies and get benefit of the other fund management styles too in their portfolio. So one thing, two funds that you need to stop your SIP is an healthcare fund, because not just, I need to reduce your AMC exposure, but here you are taking a sectoral call. If you are linked to healthcare, if that's a sector you are tracking very closely, and you know what is the right time to enter and exit, then you can continue. But I have seen in most cases that does not happen. And every sector goes through its cyclicality. The sector that performed well last year may not do well this year. So, leave it to an expert, a fund management team who's tracking it very closely for you. And, therefore deciding when you need to go overweight or underweight a particular sector. So stop your SIP there. Second scheme that I am suggesting you to stop your SIP is a retirement fund. Now, when you enter into a retirement fund, there is a certain lock-in, there's a certain asset allocation that gets played out. The choice that you've made is a conservative scheme of the retirement fund. Given that you have a 15-year horizon, you can actually go in for an aggressive strategy. So rather than locking in your money and not having control over the asset allocation that's getting followed, you rather build a pure equity and a pure debt fund portfolio and manage it without having any concerns of withdrawals or lock-in periods. So stop your SIPs in these two. What you can add on to, I suggest you to add on an ICICI Pru dividend yield fund and a Motilal Oswal large and mid cap fund to your portfolio. That's some of my recommendations.
Shweta, let's take Kashish's question. And she also wants you to review her portfolio, but she has an investment horizon of 12 years, stepping up her investments by 10% every year. And how much she would be accumulating, that is her question. Nippon Large Cap 2000, Motilal Oswal Mid Cap, Bandhan Small Cap, Parag Parikh Flexi Cap, JM Flexi Cap again 2000. What's the rough corpus according to you, or approximate corpus that she can accumulate by this current investment amount, Shweta?
Sure. Kashish, I did a rough math and looking at how historically, the equity market returns have been. Over a long time, we've seen equity markets can deliver around 12 to 13% return. Assuming that the same is made going forward too with the current SIP plus the step up, you should get to a goal value of around 50 lakhs over this 12-year period. So do see if post inflation, that's the amount which would help you meet your objective. If no, then look at increasing your SIP value. Coming to the schemes that you have now, some of the schemes are good and you can continue there. Just two schemes where I suggest you to stop your SIP is a JM Flexi Cap and a Bandhan Small Cap SIP. Instead of this, what you can add on to is an SBI Large and Mid and a Canara Robeco Multi Cap Fund. So while you are stopping your small cap exposure through the Bandhan scheme, but you would end up getting some small cap exposure because there's a Canara Robeco multi cap in the portfolio, as well as you'll build to a mid cap exposure of around 20-25% with you already having one mid cap scheme and a multi cap scheme. So we're trying to get you to a portfolio which is around 68 60 odd percent large, and the rest of it being a combination of mid and small cap. I hope this helps you.
All right. Shweta, let's take one more question. And okay, I think, okay, I just got to know that's time up on the show today. It's these amount of queries only that we could have on the show today. Thank you so much for taking time out and helping our viewers with their financial portfolio queries. And with that, I'm going to sign off, but I'm going to leave our viewers with our WhatsApp number, email ID. Thank you so much for watching. Goodbye.